Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Over the last 3 days, we've noticed that the Australian dollar has rebounded off that key level of 71.70 and from there has trekked all the way back towards that top side of the range around 72.80-90. It is seen that there is quite interesting that the supply has increased since the last couple of days from that challenge that we've seen broaden out to about 7 or 8 days. From that decline, I anticipate the market should find further retreat back towards the support level around 72.25 and still holding the base around 71.70. Technicals have buckled and the MACD is holding to a weak signal. So let's see if the bears can actually pull the Australian dollar down back towards that bottom side of the range. The euro, however, since rebounding off the lows that we can see here close to the 115.65 and putting the indicators in extreme oversold condition, has rebounded and comfortably as the US dollar index, which measures the greenback strength against a basket of 6 major currencies, has retreated from its objective and also a peak of 94.48, the highest level since late September 2020. Currently trading around 93.90, that is the index. We can see that the euro has backed away from the top side of its range. As it is weighted at 57.6, the market should find good resistance around 116.20 and above firmer at 116.70. Now a close under 115.55 would give further scope to the downside and re-challenge the lows around 115.35, and looking at the weeklies could be looking towards this region of 113.5. The dollar yen, very whippy since hitting the highs around 112 and posting a very strong candle rejection point. However, the inverted hammer has put a little bit of a support at the current level, just bringing us down to around that 110.75 level. I do anticipate that although the attempts towards the upside may show a bullish bias, but should likely fail and eventually see pressure back towards the support. Sterling, very mixed price action in the last couple of hours. Nevertheless, the market over the last 3 days has been somewhat bullish, but the indicators are somewhat buckled. And therefore, I do feel that we could see a rejection towards the top side around 136.30 to 137. If so, then that would see a market pull back towards the bottom side of the range around 134.15.25. Looking at a different pair, that is a CAD yen, we can see that there is many mixed signals here. And lastly, there was a Dragonfly Doji, and the market did take the challenge back to 88.5 and rejected. We are overbought, so it is time that the market should actually stage a pullback from that top side of the range and look towards 87.65 and reassess. The gold closed over 1,761 to 66 level and posted a fresh high recently around that 1,770. The break of the trend and also from this slight strong candle should see further guidance towards the upside, but likely to find the top around 1,786 to 88, and I do anticipate the market to possibly reject and fall back. That is to the lows close to around 1,720. The oil has posted very strong gains over the last couple of days and likely to see maybe a little bit more upside. However, the break above this 76.5 level has left me neutral, but we are overbought. So I'm just seeing how the market's going to squeeze higher as OPEC sticks to its existing pack for a gradual increase in oil output, which has put a bit of a squeeze on the top side of this range. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intro report. And I hope you enjoy the rest of the day and a new start to the week.